Yes, good afternoon, students. This is CA Rajeev Sachdeva.
Myself, C. Priti Sharma.
Students, in last lectures, I have taken you through the company audit portion. Basically, my perspective, my objective was to teach you as to how to study. Instead of teaching the topic itself, my emphasis was on how to study the law-related portion. So students, having completed the company audit, now we have started in the last lecture basic concepts. And in last lecture, students, please remember, you may recall that we had studied basically definition of auditing, then qualities of auditor, objectives of auditing, and we will take you through audit evidence, inherent limitations of audit, etc. in this lecture. Students, again I am stressing on one thing. I am trying to basically teach you how to study. Instead of understanding, you should understand the topic, and there is no doubt on this. But through this topic, you should learn also that how to study the audit. So this is the basic emphasis I am laying in each and every lecture. Before moving further, I read out disclaimer. Yes, students, you are advised to refer to the institute study material, and if there is any supplementary study material, you may also refer, and other relevant legislations for latest provisions, amendments which are required for your examination.
Okay, students, please remember, for relevant and 5 sections of the Companies Act 2013 and any other legislative amendments which includes notification, circular, rules, guidelines issued by the relevant regulating authorities applicable for May 2000 examination, please note the cutoff date is 31st October 2015, which means any of the notification issued by the relevant regulating authority up to 31st October 2015, which is relevant to your auditing subject, is very well applicable for your May 2016 examination. CARO 2015 is issued by the MCA on 10th of April 2015, is applicable for May 2016 examination. Please note there are 12 clauses in this CARO 2015. You can refer chapter 7 of the study material, July 2015 edition. You can also refer practice manual where question based on CARO 2015 have been given. Okay, these are some of the queries raised by the students through registration form for online mentoring. What are the applicable changes to auditing for May 2016 examination? This is the basic question we used to receive these days. What are the applicable changes? Students, please note you can refer list of announcement which is very well hosted on the website and published in Students Journal. You can also refer the academic update part given in the RTP May 2016 examination. There you may find many updates like ceiling on number of company audits. Ceiling on number of company audits where exemption is given to certain class of companies from ceiling limit. Exemption is given to one-person company, dormant company, small company, private company with certain paid-up capital limitation. Then you will be finding guidance note. Guidance note on reporting under section 143(3) F and H of the Companies Act 2013. So these are the basic changes you may find through the list of pronouncement and the RTP. Please refer RTP for more practice.
Yes, students, how to present answers for questions based on essays. At this level, IPCC level students, you are advised first, I would say that you should study the study material first, especially volume 1 of the study material, and volume 2. Basically, you should study the study material for essays, and the portion which is covered through the study material you need not cover in the auditing pronouncement book. So auditing pronouncement book you should study at the last. First you should be sure with the study material and the practice manual. So far as how to present answers, first you do, when you will do, then you will learn how to present. Basically how to present answer, this has been very much covered in the practice manual. So you refer to the practice manual, you refer at least say 5, 10 questions, 20 questions if you solve in the practice manual, go through the practice manual, you will definitely come to know how to present answers for the questions based on essays. What is the difference between qualified opinion and adverse opinion? Students, this is another interesting question. Having obtained, first I am covering qualified opinion. Having obtained sufficient, when the auditor has obtained sufficient appropriate audit evidence, but auditor concludes that misstatements are material but not pervasive. I have received, as an auditor, I have received sufficient appropriate audit evidence. Audit evidence complete hai. Misstatements are material. Misstatements are material, but not pervasive. But not pervasive. Pervasive, the word pervasive means spread. Misstatements are not spread across the financial statements. Students, this would mean that misstatements would not spread across the financial statements. So, financial, what I mean to say is, I have obtained sufficient appropriate audit evidence as an auditor. Misstatements are material, no doubt on this, but these are not spread across the financial statement. These are not pervasive. So I would express, in that case, students, I will express qualified opinion. So qualified opinion, I will express qualified opinion when misstatements are material but not spread across the financial statements. And when I will give the adverse opinion, students, having obtained sufficient appropriate audit evidence, I have obtained sufficient appropriate audit evidence, like in qualified opinion, but misstatements are both material and pervasive. Misstatements are both material as well as pervasive. Means misstatement, you remember my first lecture on the basic concepts, where we have explained the word misstatement, material misstatements, and risk of material misstatement. Students, recall, misstatement is nothing but difference. This is difference between actual and required. What I have actually presented in the financial statements and what was required in the financial statement, this is the difference. Misstatement. When the misstatements, I have obtained sufficient appropriate audit evidence, But my conclusion is that that misstatements are both material and pervasive. They are spread across the financial statements. Then I will issue the adverse opinion. So this is the difference, basic difference in qualified opinion and adverse opinion. Risk of material misstatement. What is the risk of material misstatement? Now, misstatement, in last lecture I had explained, risk of material misstatement is the risk that the financial statements may contain material misstatements. It is the risk that the financial statements may contain material misstatements. It is the risk that financial statements may contain material misstatements. So this is basically what is contained. If you see risk of material misstatement, so financial statements may contain the risk that the financial statement may contain material misstatement. Now the important words I am telling you, prior to audit. Prior to audit. This is the risk of material misstatement. So risk that financial statements may contain material misstatements prior to audit. These are the important words, students, which I am stressing upon. Prior to audit. And risk of material statements, this has two components, inherent risk and then control risk. I explained in the last lecture, if you can remember. What is the difference between compliance and this? I will be explaining in this lecture. Is there any evidence which can be said to be conclusive? Is there any evidence? As an auditor, whatever evidence is obtained, the evidence is persuasive only. Please remember, don't go after this word conclusive. As an auditor, whatever evidence I get is persuasive only. And persuasive is not, you see, this is solid evidence. This is concrete evidence. Persuasive is not weak evidence. But this evidence, whatever evidence I obtain, the evidence is persuasive, means it is solid evidence. It is concrete evidence. I can conclude. This is not conclusive evidence. This is not the final evidence. Conclusive means final evidence. So this is how you should interpret. How to study, I have study essays, I have explained. How to prepare revision notes. Students, this will depend. You just prepare. Learn the definition part, learn points and balance material, read out in such a manner so that you are able to reproduce at least 60% of what you have gone through, the balance material. So learning is very important, I tell you. Learning of basically definition part, so far as basic concepts, etc., from first to four chapters, first four chapters are concerned, I am stressing upon. Learning is in respect of definitions. Learning is in respect of points. And then balance material you have to study in such a manner. Balance material you cannot learn. You need not learn. But you should study in such a manner that you are able, if it appears in the examination, you are able to reproduce at least 50-60% of it. So if you study like this, and law, as in company audit, I have explained to you all how to study company audit, learning of sections is required. And having done this, then prepare at the end of the day, you should write down what you have learned, what you have studied, and what you will write, what you write, that will become your revision notes. How to revise whole syllabus just one day before exams. Students, one day before exams, whole syllabus just one day, this will depend on your preparation level. If you prepare in the manner I am discussing in the last lectures, so many lectures I always discuss how to study, how to prepare, etc. If you study in that manner, then I think revising whole syllabus a day before exam will not be a problem. Yes, coming to the topic, inherent limitations of audit. Before I move further, I check for online queries if any. Yes, Monica Gupta is asking, while conducting audit of a bank, you find that bank has advanced loan for purchase of machinery on the basis of valuation report prepared by a civil engineer. Will you approve the action taken by bank? Justify the answer SA 500. Yes, student, definitely. Auditor will definitely use SA 700, SA 500 in this. So you should go through SA 500, then write down the answer and send to us on the mail. We will vet it and then get back to you. Yes, Vishnu Sharma is asking, more specific of qualifies and adverse. I have already explained, so you should understand that. Yes, we now move back to our PPT part. Yes, inherent limitations of audit. As per students essay 200, overall objectives of the independent auditor and conduct of an audit in accordance with standards of auditing. Auditor is not expected to and cannot reduce audit risk to zero. Basically, this is the thing. Auditor he cannot reduce audit risk to zero level, and therefore resulting thereby that he cannot obtain absolute assurance. He cannot obtain. He can obtain only reasonable assurance. So this is the idea behind. This is the basic principle, students, behind the inherent limitations of audit. If I cannot reduce the audit risk to zero level and I cannot obtain absolute assurance, I can only obtain reasonable assurance, then definitely yes, there would be limitations, inherent limitations of audit. Then the financial statements are free from materials misstatements. This is because there are inherent limitations of audit. This is the reason behind. As per SA 200, this is how you can prepare the brief notes. A student was asking how to prepare brief notes. So this is the entire paragraph, and at the end of the day, at the end of it, I just write a few lines. The auditor cannot reduce audit risk to zero level, and he cannot therefore obtain reasonable assurance, absolute assurance. Means he can obtain only reasonable assurance. He cannot obtain absolute assurance. Students, this is because there are inherent limitations of an audit. So this is the thing I am telling you, I am impressing upon how to prepare brief notes. First point, students, inherent limitations of an audit arise from nature of financial reporting. Preparation of financial statements involves one word, if you ask me really, that is judgment by management. Judgment. Whenever there would be judgment, if my judgment would be there, then definitely that would become limitation. This is the subjective sort of thing. If there is subjective sort of thing, then it would become limitation of the audit. So nature of financial reporting is such that the preparation of financial statements, as you all are aware, financial statements definitely involves judgment by the management. So many factors are there: inventory valuation, fixed asset valuation, where we have to decide, we have to judge. So judgment by the management in applying the requirements of the entity's applicable financial reporting framework to the facts and circumstances of the entity. So wherever judgment will come, that believe me, that would become the limitation. So many financial statements items involve subjective decisions. As I was discussing, judgment will be there. So if there is judgment or assessments or a degree of uncertainty will be there, and there may be a range of acceptable interpretations of judgments that may be made. So this is the basic limitation. So if one word I should explain to you, this is the judgment by management. This is the point basically. In addition, second point, the nature of audit procedures.
Nature of audit procedure. This is also an inherent limitation for the auditor while performing his auditing function. There are practical and legal limitations on the auditor's ability to obtain audit evidence. Yes, legal limitation means the auditor is not having any legal right to obtain any auditing evidences. Like he can only ask for the evidences, he can only ask for a particular document, he can only ask for a information from the management. He cannot search himself the information or the documents. He can only ask from the management. It's up to management to provide any information or documents. Here are some of the examples, like fraud. Fraud involves sophisticated and carefully organized schemes designed to conceal it. Yes, it is actually an intentional misstatement performed by the management. Audit procedure used to gather audit evidences may be ineffective for detecting an intentional misstatement. Intentional misstatement means the fraud. If this was unintentional misstatement, then this may be the error. But in this case, if it is intentional, then it is a fraud. That involves, for example, collusion to falsify documentation, which may cause the auditor to believe that audit evidence is valid when it is not. You can take the example of bogus companies created by the management of the company itself. Bogus company, basically a company which is on paper only. There is no office, no people operating the company. Only the transactions are shown between the companies, which is in actual, not in existence. There can be another example, like you are showing a duplicate bills, altering any documentation for the purpose of deceiving the person. An audit. Second example. An audit is not an official investigation into alleged wrongdoing. Yes, the auditor is not an investigator. He can only ask for the documentation. Accordingly, the auditor is not given specific legal powers such as the power of search, which may be necessary for such an investigation. Like in section 143, he has a right to ask for the documents from the management of the company, from the officers of the company. He cannot himself search the document. There is another example. There is a possibility that management or others may not provide intentionally or unintentionally the complete information that is relevant to the preparation and presentation of the financial statements, or that has been requested by the auditor. Even though the auditor has performed his audit procedure to obtain assurance that all the relevant information has been obtained, he cannot be certain of the completeness of the information. He may be asking for the documentation, for the information from the management, but he cannot be assured that the information provided by the management is actually full or complete or incomplete. he cannot be assured for that.
Yes, students. Timeliness of financial reporting and the balance between benefit and cost. Cost benefit analysis. So, of course, the cost benefit analysis, this should not be done if there is statutory obligation, statutory requirement. It cannot be compromised with because it is a statutory requirement. But otherwise speaking, cost benefit analysis has to be done in case of internal audit assignments. In case there is management audit assignments, then cost benefit analysis definitely plays a role. So matter of difficulty, time or cost involved, this is not in itself a valid basis for the auditor, as I was explaining to you, to omit an audit procedure. So this is not an basically not in itself a valid basis. So matter of difficulty, time or cost, I cannot take the excuse that there was no time, therefore no time left for the audit and therefore I reported in hurry and the report has gone wrong. Students, this will not be a valid basis for the auditor to omit an audit procedure. So this is very important point which you need to understand. On this basis, he cannot omit an audit procedure for which there is no alternative. This is very important, for which there is no alternative. Or to be satisfied with the audit evidence that is less persuasive. Audit evidence that is less than persuasive, which is not very solid audit evidence I am encountering. So appropriate planning assists in making sufficient time. So these are the things I have to plan accordingly. I have to plan my timings and resources available for the conduct of the audit. So relevance, notwithstanding this all things, despite all things, relevance of information and thereby its value tends to diminish over time. And there I have to strike a balance between the reliability of information and its cost. So this definitely becomes the limitation of auditing in one manner. This is how you can prepare brief notes, students. Timeliness of financial reporting and balance between benefit and cost. So relevance of information and thereby its value tends to diminish over time, and there is a balance to be struck between reliability of information and its cost. Other matters, before we move ahead, we check up for online queries, if any. Other matters that affect the limitations of an audit. In case of certain assertions, assertions means representation by the management. Assertions means representations by management. The potential effect of the limitations on auditor's ability to detect material misstatements are particularly significant. So other matters that affect the limitations of an audit are such assertions, means one word if I tell you, assertions by the management, like fraud, particularly fraud involving senior management or collusion. The existence and completeness of related party relationship and transactions. Occurrence of non-compliance with laws and regulations. and future events or conditions that may cause an entity to cease to continue as a going concern. Because of the limitations of an audit, there is an unavoidable risk that some material misstatements of the financial statements may not be detected. This is the impact, students, we are studying. Because of the limitations of audit, so risk would be there. So because audit have its own limitations, when anything has limitations, then risk will be there. This is automatic. An unavoidable risk that some material misstatements and risk of material misstatements may not be detected, even though the audit is properly planned in accordance with the essays. So this is very important, I tell you, to grasp this. So what is the impact if the question appears in your examination? What would be the impact of limitations of audit? So because of the limitations of the audit, there is an unavoidable risk that some material misstatements may not be detected, even though my audit was properly planned and performed in accordance with the essays.
Yes, there might be some question asked in the examination that what are the impact of inherent limitation on an audit. Then you can answer yes, there is an unavoidable risk that some material misstatement of the financial statement may not be detected. This is the impact of inherent limitation of an audit, even though the audit is properly planned or performed in accordance with the standards on auditing.
Students, for revision purpose, Preeti will take you through the entire topic in just a visionary manner.
Yes, inherent limitations of audit. As per Essay 200, which starts with the overall objective of independent auditor and conduct of an audit in accordance with the SAs. Here the essay is explaining the auditor is not expected and cannot reduce the audit risk to zero, because yes, there's always a risk that the conclusion, that the opinion given may be wrong. He cannot therefore obtain, because there is inherent limitation of the audit, he cannot actually obtain absolute assurance. He can obtain only reasonable assurance that the financial statements are free from material misstatement due to fraud or error. Fraud, that is the intentional error, and error is the unintentional misstatement. Actually, misstatement, if it is intentional misstatement, then it is a fraud, but if it is an unintentional misstatement, then it is an error. Nature of financial reporting. This is the basic inherent limitation of an audit, where it all depends on judgment. It involves judgment by the management while preparing financial statement, applying the requirement of the entity's applicable financial reporting framework to the facts and circumstances of the entity. Nature of audit procedure. Here, legal bar is given on auditor while obtaining audit evidence. He cannot obtain or search for any information or documents. He can only ask from the management to provide any information or documents. And it's up to the management to provide what they want to provide. It may be incomplete, it may be complete, it may be intentional, it may be unintentional. It's all up to the management what they want to provide or what they don't want to provide. Timeliness of financial reporting and the balance between the benefit and cost. Other matters that may affect the limitations of an audit, which includes some assertions like fraud, Particularly fraud involving senior management or collusion. Senior management, where senior management is involved in fraud, there are less chances to detect such kind of fraud because it is actually intentional misstatement. The existence and completeness of related party relationships and transactions. Occurrence of non-compliance with laws and regulations, future events or conditions that may cause an entity to cease to continue as a going concern. Because of inherent limitations, there are unavoidable risks. You can get a question from this topic like what are the impact of limitations of an audit? Then what you need to write? You need to write there is unavoidable risk that some material misstatement of the financial statements may not be detected even though the audit is properly planned or performed in accordance with the SS.
Yes, students. Having completely done this topic, inherent limitations of audit, and simultaneously a quick revision by Preeti Sharma on the topic, we move further to audit evidence. Audit evidence may be defined as, this is very interesting topic if you see. Audit evidence may be defined as the information used by the auditor. This is the information. If there is one word you have to write on audit evidence, that is the information I tell you. So these are the quick words you should be ready with this. Students ask me how to prepare, how to do. So you should be ready with the quick words. Definitely this, whenever the audit evidence, I talk of audit evidence, one word which should strike in your mind is information. So this is the information which the auditor will use in arriving at the conclusions on which the auditor's opinion is based. Very, very beautiful definition. Very good definition. So students, this is the information which the auditor will used by the auditor in arriving at the conclusions. I have to arrive at the conclusions on the basis of information on which the entire thing, whatever I have collected the information, my opinion will be based on that, on which the auditor's opinion would be based. So audit evidence, if I am talking of audit evidence includes both information contained in the accounting records underlying the financial statements, information contained in the accounting records, and other information. There are two things which you need to remember so far as audit evidence is concerned. One is, moving further, students, information contained, audit evidence, there are two things. So far as audit evidence is concerned, it includes two things. First is information contained in the accounting records, on the basis of which financial statements have been prepared, underlying the financial statements. So information contained in the accounting records, and secondly, other information. So audit evidence includes information contained in the accounting records. Accounting record. Now what are accounting records? As you are all aware, since class 11th you have been studying the accountancy. So this is part of accounting, I should say. Accounting records include records of initial accounting entries, journal entry book, supporting records, purchase book, subsidiary books, sales book, fixed asset register. These are supporting records, traveling expense register, whatever records which will support the main ledger, which will support the journal, checks and records of electronic fund transfer, invoices, record of invoices, contracts, the general and subsidiary ledgers, journal entries and other adjustments to the financial statements. So this is the entire thing is basically information contained in the accounting records. And what accounting record includes, I have already explained. Other information that authenticates, which is authenticated, which is authenticated information that authenticates the accounting records and also supports the, this is evidence, vouchers basically, purchase bill, sales bill, external evidence, internal evidence. So that is included in the other information that authenticates the accounting records, that proves the accounting records, I should say. Authenticate means proves. That proves the accounting records and also supports the auditor's rationale behind the true and fair presentation of the financial statements. So this is all about audit evidence. Other information which the auditor may use as audit evidence includes, for example, minutes of the meeting, written confirmation from trade receivables, trade payables, manual containing details of internal controls. This is what you can include in the other information. Now, moving further, before we go ahead, we check up online queries if any. Yes, student has asked the internal control questionnaire. Yes, I will explain in the next lecture. Sufficiency and appropriateness of audit evidence. Audit evidence, as you all are aware, audit evidence is necessary to support the auditor's opinion. It is cumulative in nature and is primarily obtained from audit procedures. So, what is the basically sufficiency and appropriateness? Sufficiency is the measure of quantity of the audit evidence. If I am talking of sufficiency, this is measure of quantity of the audit evidence. The quantity of audit evidence needed is affected by the auditor assessment of the risk of misstatement. The higher the assessed risk, more audit evidence is likely to be required. And also by the quality of such audit evidence. Higher the quality, the less may be required. So sufficiency of audit evidence, this is a measure. If one word I am talking of about the sufficiency, that is quantity of the audit. Sufficiency is the measure of the quantity of the, this is the quantity of audit evidence. So obtaining more audit evidence may not compensate for its poor quality. Auditor's judgment as to sufficient, whether the audit evidence is sufficient or not, it would be affected by the three factors. And the three factors are materiality, risk of material misstatements, and size and characteristics of the population. Very important factors. So this is the question basically. The auditor's judgment as to sufficiency may be, what are the factors which may affect the auditor's judgment as to sufficiency of the audit evidence. So there are three factors: materiality, risk of material misstatement, and size and characteristics of the population. Materiality may be defined as a significance of class or transaction, account balance, and presentation and disclosure to the user of financial. So this is the significance of how significant the transaction is, how significant the account balance is, how significant presentation and disclosure is to the users of the financial statement. So materiality for one word is in favor of materiality is its significance. So less evidence would be required in case assertions are less material to the users of the financial statement, and more evidence, assertions are more material than more evidence. So directly proportion हो गया students. So materiality may be defined as the significance. This is the significance of, and there are 3 points: class of transactions, account balance, and presentation and disclosure. So there are, if you look at the assertions, the assertions we study under 3 heads: transactions, assertion in respect of transactions, account balances, presentation and disclosures. Risk of material misstatement, as I explained to you earlier, it is the risk that the financial statements are materially misstated prior to the audit. These are the keywords: prior to the audit. So, risk of material misstatement may be defined as the risk that the financial statements are materially misstated prior to the audit. So this consists of 2 components: inherent risk and control risk. Size of population refers to the number of items which are included in the population. So less evidence would be required in case of smaller population, more homogeneous population, but on the other hand, in case of larger, more heterogeneous populations, more evidence would be required.
Sufficiency and appropriateness of audit evidence. Sufficiency talks about the quantity of audit evidence, and appropriateness here talks about the quality of audit evidence. Appropriateness is a measure of the quality of audit evidence, that is its relevance and its reliability in providing support for the conclusion on which the auditor's opinion is based. Appropriateness is all about the quality of audit evidence, its relevance and its reliability for the auditor to support his conclusion while providing his opinion on the financial statements of an entity. The reliability of evidence is influenced by its source and by its nature, and it's dependent on the individual circumstances under which it is obtained. SA 330. SA 330, which is on auditor's responses to assessed risk, it requires the auditor to conclude whether sufficient appropriate audit evidence has been obtained or not. Whether sufficient appropriate evidence has been obtained to reduce the audit risk to an acceptably low level, and therefore it enables the auditor to draw a reasonable conclusion on which to base the auditor's opinion, which is actually a matter of professional judgment. Now, students, the sources of audit evidence. You can have the external sources of audit evidence, which you can get from the external sources like external confirmation for account balances. You can have the bank statement. You can have the expert opinion, which is actually an external source of obtaining audit evidence. Another source is the internal source. Internal source of obtaining audit evidence like minutes of meeting. This is an internal source of obtaining audit evidence for any act of the company. You can have purchase bills, sales bills. These are all the internal sources. You can have the ledger balances. So external sources of audit evidences are more reliable comparative to the internal sources of audit evidences. Internal sources like sales bill, purchase bill, if these are in original copy, then it is more reliable comparative to its photocopy. So the sources of audit evidence and its reliability, it depends. The reliability of audit evidence is dependent on the sources from which the audit evidence is obtained. There can be another sources like written sources or oral sources. If an audit evidence is in written form, like written representation you have obtained for a particular transactions in the company, for a particular act in the company, then this is more reliable comparative to the oral communication from the management of the company. Some audit evidences. Some audit evidences are obtained by performing audit procedure to test the accounting records, like analysis, review of data, reperforming procedure followed in the financial reporting process, reconciling related types and applications of the same information. Through the performance of such audit procedure, the auditor may determine that the accounting records are actually consistent and agreeing to the financial statement or not. More assurance is ordinarily obtained from consistent audit evidence obtained from different sources or of a different nature than from the items of audit evidence considered individually. For example, corroborating information obtained from a source independent of the entity. Like in the case of debtors confirmation balance, you obtain the confirmation of balance from the third party, from the person from the balance is shown in the accounts. You ask that person to confirm the balance whether it is correct or not. This is actually an external confirmation from third party, which is given in our essay 505. So corroborating information obtained from a source independent of the entity. Yes, in this case you have obtained the evidence from a third party which is actually an independent party. This may increase the assurance the auditor obtains from audit evidence that is generated internally comparative to the internally generated audit evidence. The externally generated audit evidence are more reliable. Information from sources independent of the entity that the auditor may use as audit evidence may include confirmations from third party like external confirmation I told you already, analyst report, comparable data about competitors.
Before we move further, we check up for online queries. Yes, Kanaya Suman is asking, what is the meaning of sufficiency of audit evidence? Now the audit evidence, very good question. Audit evidence, we need evidence to establish the items which are contained in the financial statements. And the entity which I am auditing, if it produces before me a certain piece of evidence and I am not satisfied with that evidence, I ask them to bring more evidence, second evidence, third evidence, more persuasive evidence I ask for. If I am not convinced, say the organization brings before me the balance confirmation certificate from bank. I ask them further evidence. You bring the bank statement. And if I go to the bank and there I collect the bank confirmation certificate, there I collect the bank statement, third party confirmation if I require, the statement duly certified from the banker. So this is the quantity I am asking. Quantity sufficiency is the quantity of evidence I am asking. And appropriate is the quality. Sufficiency is the quantity and appropriateness is the quality of evidence I am getting. So this is the difference you need to understand. Now we move back to our PPT part. Audit procedures to obtain audit evidence. Friends, audit procedures, inspection, these are the audit procedures as discussed in essay 500. Inspection, observation, external confirmation, recalculation, reperformance, analytical procedures, and inquiry. Believe me, all these are definition part. If you need to learn all definitions. So here is the learning required. Learning is required here. So you should understand how to study basically. Inspection involves, this is examining records or documents. So inspection is examination basically. Inspection consists of examining records or documents, whether they are internal documents or these are external documents, whether in paper form or in electronic form or other media form, or a physical examination of an asset. So all this is covered under inspection. So one word I am telling you is examining, be it records or documents, any type of record or document, whether it is external or internal, and in any form it can be. So there are three things which you can link up. It is examination of records or documents, and in any form. That can be, document can be in any form. It may be in physical form, it may be in electronic form, or a physical examination of asset. Observation. So inspection is examination, observation is looking at the things. One word for observation is looking at. Observation consists of looking at a process or procedure which is performed by others. Looking at a process or procedure being performed by others. Observation means looking at, this is looking at things. So looking at process or procedure being performed by others, this is the definition you need to learn. For example, the auditor's observation of inventory counting, now he is looking at the things being performed by the management. External confirmation, you all understand. This represents audit evidence obtained by the auditor as a direct written response from a third party. This is the direct written response from a third party which is received by the auditor. That is the confirming party. It may be in paper form or. So this is the direct written response to the auditor from a third party. This is the direct written response to the auditor from a third party. This is external confirmation. Recalculation consists of, it is very simple. This is the mathematical, checking the mathematical accuracy, recalculation I am doing. Recalculation आप करते हो, ordinary daily life में करते हैं. So recalculation consists of checking the mathematical accuracy of documents or records. It may be performed on calculator manually or electronically. Reperformance involves reperform. This is the auditor's independent execution of procedures or controls that were originally performed as part of the entity's internal control. Whether these are the basically tests, whether they are operating or not. So this is the independent execution of procedures, execution of controls by the auditor. Analytical procedure means ratio analysis. If you ask me one word for the analytical, that is ratio analysis. This consists of evaluation of financial information made by a study of relationships among the financial. So this is basically ratio analysis, I tell you. Analytical procedure means ratio analysis. Enquiry consists of, this is seeking information. Enquiries seeking information from knowledgeable persons, information of knowledgeable persons, both financial and non-financial, within the entity or the outside entity. So this is the inquiry, and this is further audit procedures. So students, in this lecture I have told you, I have taken you through inherent limitations of audit, and then audit evidence we have discussed, and audit procedures to obtain audit evidence, sufficiency and appropriateness of audit evidence. This is all what we have discussed in this lecture. Now we move back to online queries, if any. Yes, students, in case of any further query, you may contact us at 0120 3045925. Our email ID is rajeev.sachdeva@ica.in, or you may send us mail at karuna.bansali@ica.in. Thank you very much, students. Thank you.
Thank you, students. All the best.